Hello and welcome to the Business Standard Morning Show. I'm Swapnil Joglekar. It's the 5th of December 2023 and here are the questions we'll be answering today. Will assembly poll outcome trigger a pre-election rally? What's behind JSW's plan to enter the auto sector? Why are Reliance and Tata struggling in e-commerce? And why are judges called my lord? The equity market scaled fresh lifetime highs on December 4th, a day after BJP swept 3 out of 4 state elections. So, have the assembly poll results set the stage for a pre-general election rally? Watch Nikita Vash's special report to find out.
The victory of the Bharatiya Janata Party in 3 of the 5 assembly elections lifted the spirits of market bulls on 4th December. The benchmark S&P BSE Sensex leaped over 1,400 points intraday and hit a fresh lifetime high of 68,900. The Nifty 50, on the other hand, claimed a new peak of 20,702 levels, led by a strong rally in financial shares. According to analysts, the BJP's decisive wins in the high decibel bipolar contests in the Hindi heartland imply its firm footing in the 2024 general elections. The political continuity, they believe, could support economic growth, retain robust earnings, and support a pre-election rally. Historical trends reveal that the Nifty has surged in the range of 9 to 36% 6 months prior to the announcement of the general election results on 5 previous such occasions.
Pre-election rallies begin in the run-up to the elections around 5 to 6 months before the elections. It has already started. Nifty is at record highs. Macro perspectives, we have a Goldilocks scenario. Therefore, the rally can continue. Nifty goes up by another 600 to 700 points. Valuations will get stretched and there can be institutional selling.
A section of market experts, however, opine that low possibility of election-linked volatility may help the market sustain its rich valuations. Kotak Institutional Equities, for instance, believes the bullish sentiments of domestic retail investors may get further strengthened by the BJP's resounding victories. It is also possible that the muted sentiment among FPIs may also see a positive change. Against this backdrop, Motilal Oswal Financial Services is bullish on sectors like BFSI, industrials, real estate, auto, and consumer discretionary. Phillip Capital is positive on capital goods, defense, cement, metals, pipes, and EMS. Kotak Institutional Equities, meanwhile, favors mega caps and select large and mid caps. Overall, analysts believe the assembly poll outcomes remove a key political overhang. Technically, they see Nifty hitting 22,500 over the next few months amid intermittent selling. Today, on 5th December, investors will track services PMI data in India and the US.
The market valuation of BSE listed companies recently touched $4 trillion. It is now narrowing the gap with Hong Kong. Nikkei, meanwhile, has just reported that there are more initial public offerings in Mumbai's 2 exchanges than any financial center in China. Staying with China, India's JSW group last week signed a pact with Chinese state-owned SAIC Motor, which makes MG cars. As part of the deal, India's largest steel maker will pick up a 35% stake in the joint venture, which will make electric cars in India. But why is JSW Group entering the automobile sector? Tariq Ahmad finds out.
Even as the Indian government has reportedly put the approval process for Tesla's entry on a fast lane, the automobile sector is abuzz with yet another interesting news. The country's largest steelmaker, JSW, is making a debut in electric car manufacturing. And China's well-known brand, Morris Garages or MG Motors, is offering it a helping hand. After Tata, it will be the second big steel maker to venture into India's automobile sector. MG Motor India, which is owned by China's SAIC Motor, has just over a 1% share of the country's passenger vehicles market. It sells SUVs under the Hector, Gloster, and Aster brands, and two EV models under the brand names of ZS and Comet. MG is the second largest electric car seller in the country with a market share which is close to 11%. MG's ZS EV is one of the best-selling electric car models in India. The company had in January said that it expected electric vehicles to account for at least a quarter of its sales in India in 2023. Amid increased scrutiny of Chinese investments in India, MG's parent firm, SAIC Motor, has been looking to raise funds to develop its Indian electric mobility business, a Reuters report had suggested last year. And now, Sajjan Jindal promoted JSW Group has entered into a joint venture with SAIC Motor Corp. In this joint venture, which will focus on electric vehicle manufacturing, JSW Group would own 35%. And in the next 2 years, it has a plan to become a majority shareholder. The new unit is intended to more than double the company's installed capacity to a total of 300,000 units from the current 120,000 units. JSW Group has multiple listed and unlisted companies like JSW Steel, JSW Energy, JSW Cement, etc. under the JSW Group with a total revenue of $23 billion. But this is the first time that the conglomerate is entering the automobile sector. So the obvious question is, why?
If you look at it, JSW over the last few years has been expanding into new businesses. They've also got into the business of paints. So they're looking at more consumer-facing businesses as against the traditional steel businesses. And if you look at this sector, the auto sector, it actually ties in with usage of steel and all that. So it makes different kinds of sense for JSW to consider taking up equity and a share in MG Motors.
We have to mobilize more than 1.4 billion people, and undoubtedly, moving 1.4 billion people, with a cleaner, greener mobility, is a great challenge, is a mission. And I think JSW is really moving into this business, because they really know that, in India with such a size of population, there is a need, for electrification. There is a need to adopt, cleaner solutions.
It is estimated that India's EV market, valued at $2 billion in 2023, will more than triple to $7.09 billion by 2025. Currently, the EV market in India is dominated by Tata with a 72% of the market share, followed by MG at 11%. JSW Group, meanwhile, is reportedly in discussion to buy Ford's Chennai plant. Experts believe that the presence of JSW Group across the B2B and B2C sectors in India will be an advantage for local sourcing and establishing a robust supply chain for MG. JSW has already been producing the advanced high-strength steel, which is used in most of the modern-day vehicles. Experts believe that this will be an advantage for JSW when entering the automobile sector. But what are the challenges?
Very few OEs and new entrants have been successful in the car and two-wheeler business. A lot of people have actually come in the past, but they've not succeeded. So it'll require a lot of acumen and hard work on the part of JSW and MG Motors to make it succeed.
The other biggest challenge for the joint venture will be the Chinese ownership of the MG. But the JSW and other Indian companies are likely to acquire more stakes in MG. Experts see this joint venture as a positive union, and it will also provide a template for the Chinese companies in India to follow.
But not all consumer-facing forays turn into money-minting businesses overnight. Even conglomerates struggle in that. India's legacy conglomerates, Reliance Industries and the Tata Group's foray into e-commerce, looked promising in the start. because of their massive offline presence for decades together. But several years on, Amazon and Flipkart still rule the Indian e-commerce landscape with over 60% share. In our next segment, Kasturi Akhil finds out why Reliance and Tata are struggling at e-commerce.
One is known to have the largest retail store network in the country, and the other enjoys the title of the only Indian brand with a valuation of over $25 billion as of 2023. That's Reliance and Tata. Yet, both have still not garnered enough consumer traction on their e-commerce platforms to bring the competition to Amazon and Flipkart. A Redseer report indicates that among the leading e-commerce players in the country, Flipkart had the biggest market share of 48% in FY23, with the remaining 52% shared by other players such as Amazon, Meesho, Snapdeal, and Nykaa. Interestingly, Flipkart's growth surpassed the industry's growth in the last 3 quarters of FY23, owing to a large selection of products and a better understanding of the shopper's needs spread across Tier 2 and Tier 3 markets.
The realization for Tata's and Reliance is that they're up against technically 2 global giants. The fact that companies like Amazon and Walmart, that owns both Flipkart and Myntra, they have exceedingly great learnings from years in the business. By virtue of being around long enough in the Indian market, they've cracked a lot of local issues, last mile delivery challenges, payment on delivery, whole returns processes. I think that they have perfected.
JioMart managed to strengthen its position in the market through expanding beyond grocery to fashion and electronics, among others. However, experts are of the view that JioMart witnessed true success following its collaboration with WhatsApp in late 2022. In September this year, JioMart said it saw a 7-fold increase in monthly orders through WhatsApp compared to the same period last year. The company attributed the success to the collaboration acting as an enabler in engaging consumers that are otherwise hesitant to shop online. Experts say both Reliance and Tata offer seamless user interfaces and superior technology stack for e-commerce apps like Ajio and BigBasket. But that's not the case with JioMart and Tata Neo.
The underlying processes that are required for a successful, e-commerce experience, fulfillment, whatever you want to call it, I think those are lacking as well. So if you look at whether it is Tata Neu or a JioMart, I think those processes haven't been streamlined like they should be, or like they are in the case of Amazon or a Myntra or a Flipkart, or even some of their own apps like Ajio or BigBasket, right? So they're doing fine in terms of the user experience, in terms of the back end, streamlined processes essentially. So these apps, whether it is Tata Neu or whether it is JioMart, they need to do that. They need to fix that aspect.
Tata Click, represented by its parent Tata Unistore, posted a 16% increase in net loss at 875 crore rupees for fiscal 2022-23. In the filings to the Registrar of Companies on July 25, Tata Unistore attributed the drop in turnover to the platform's exit from certain categories of electronics like mobile phones, refrigerators, and laptops. It said the losses extended on the back of continued investment in scaling up the business. Moreover, Tata's super app called Tata Neu, launched in early 2022, offered choices limited to in-house brands, leaving very little room for customers to hunt for a good bargain. Experts say India joined the super app bandwagon a little late after many such apps have already established their dominance in different market segments, like Zomato when it comes to food delivery, Uber and Ola for cab rides, Amazon and Flipkart for online shopping. For a single app to be able to outpace the existing apps while ensuring better quality, best price and best choice is a challenging task. This could be one of the reasons why Tata Neu couldn't take off, say experts. Experts agree that Tata and Reliance are in the early stages of expanding their retail presence in e-commerce. They emphasize the need to consolidate their diverse businesses into a unified e-commerce entity for optimal growth.
He's making plans for an early retirement. Business Standard.
After the competitive world of e-commerce, let us turn our gaze to court corridors, where an interesting debate is raging. How should a judge be addressed? Last month, a Supreme Court judge expressed displeasure at being called "my lord." He preferred being called "sir." But why are judges called "my lord"? Ayush Mishra decodes it for you.
A judge in the Supreme Court last week humorously told an advocate during a hearing to take half of his salary for one small favor, for not calling him "my lord." Justice P.S. Narasimha asked the lawyer to call him "sir" instead. Lawyers frequently use the terms "my lord" or "your honor" when presenting arguments before judges. Critics often call it a colonial era hangover. The term lords is borrowed from the English nobility, which were addressed as lords and ladies. Back then, several nobles became judges and ended up being addressed similarly. France and England had a fascinating connection that explains why we use the terms "my lord" or "milord" in court. The term "milord" in French, which denotes a nobleman or a wealthy individual and was in use till 1430s, was discovered to have originated from the other side of the English Channel and was akin to "my lord." After traveling around continental Europe for over a century, English nobles returned with this phrase in 1598, and it became widely used to refer to English nobility in general. The practice of addressing judges has been different in different courts. In lower courts, terms like Janab, Huzur, and Sahab are commonly used. As one ascends to the High Court, the address shifts to "my lord" and "your lordships." In southern India, lower courts are often addressed as "your honor." In 2006, the Bar Council of India passed a resolution stating that advocates should refrain from addressing judges as "my lord" and "your lordship." Despite its incorporation into the Bar Council of India's rules, there appears to be a lack of a uniform policy regarding the continued use or abandonment of these terms. In 2014, H.L. Dattu, the Indian Chief Justice at the time, stated that referring to judges as "your lordship" was not necessary. Gujarat High Court Chief Justice Sonia Gokani had also observed that a judge should be addressed as "sir," irrespective of the gender.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
A legal expert, meanwhile, told Business Standard that the lawyers are conversationally more comfortable in using that term, "my lord," because they do not know if a particular judge would like being addressed as "sir." So they find the colonial terms safe to use. Well, that's all for today. For more news, views and analysis, please log into business-standard.com.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.